Tesla taking advantage of its surging stock price. In a just-released SEC filing, Tesla said it planned to sell $5 billion in shares.
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So some breaking news this morning. Tesla is issuing $5 billion in stock, which is going to take their cash and cash equivalents at the end of Q4 2020 to well over $20 billion. In the business world, there's a special name for this amount of cash. It is called a metric shit ton. So in this video, I'm going to discuss the implications of Tesla's capital raise, the $5 billion, what they're likely to do with the cash, how it may affect the buying activity around Tesla's imminent S&P 500 inclusion, and what it means for the stock over the long term. So let's get into the video. But first, hey guys, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. That is an obnoxiously good return on your investment. I mean, really, deposit $100 and you'll end up with, at minimum, $21 worth of stocks, a 21% ROI on your money. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake also using the link in the description. Let's get back to it.
Tesla taking advantage of its surging stock price. In a just-released SEC filing, Tesla said it planned to sell $5 billion in shares, quote, from time to time in an at-the-market offering. Now, Tesla is set to join the S&P 500 later this month, and its stock is up, as we've talked so much about, 667% this year. But taking advantage of the moment, another $5 billion. If you ever thought this company was going to run out of cash, if you can keep selling shares at the rate that they're going, that won't be an issue for a very, very long time, if ever.
Absolutely spot on. Tesla will end this year with over $20 billion in cash, an absolutely colossal war chest, more than enough cash to get them through just about any unexpected disaster, emergency, catastrophe, who knows whatever else. This will allow Tesla to expand at the absolute fastest rate possible. However, I don't believe at this point in time Tesla can spend the money. They're just raising when they can because the opportunity is there. Why the hell not? As the saying goes, dig the well before you need the water. With Tesla stock at such an astronomical price point at this time, it makes a hell of a lot of sense for Tesla to raise capital just because they can. In the future, they may find ways to spend this, whether it's through acquisitions, aggressively ramping up production facilities if they can solve the battery constraint, developing new product lines, going heavy in research and development, and who knows whatever else. At the end of the day, this is nothing but positive for Tesla. It was only 3 months ago that Tesla did the exact same thing, issuing $5 billion of common stock to be sold whenever, and it turns out that was basically all sold instantaneously. I think the same thing may happen again. Some people are suggesting maybe Tesla's doing this to provide a little bit of liquidity for those funds that need to buy Tesla stock ahead of the S&P 500 inclusion. This is possible, but I won't be surprised if we hear from Tesla tomorrow or a couple of days from now saying all $5 billion has been sold. Let's have a look at what Tesla had to say with their SEC filing regarding this $5 billion stock offering. So we see here Tesla issuing up to $5 billion of common stock. We have entered into an equity distribution agreement with Goldman Sachs, Citigroup, Barclays, blah, 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 as our sales agents, under which we may offer and sell from time to time our common stock having an aggregate offering price of up to $5 billion. Use of proceeds. We may issue and sell shares of our common stock having aggregate sales proceeds of up to $5 billion from time to time. Because there is no minimum offering amount required as a condition to close this offering, the actual total public offering amount, commissions and proceeds to us, if any, are not determinable at this time. We currently intend to use the net proceeds from this offering to further strengthen our balance sheet as well as for general corporate purposes. Pending use of the proceeds as described above, we intend to invest the proceeds in high-grade investments, highly liquid cash equivalents, or United States government securities subject to applicable regulatory restrictions. If you read into this a little bit, it's quite clear Tesla does not need this capital. The fact that they're planning to use this raise of $5 billion to enhance their balance sheet and to invest in high-grade assets clearly shows that they're not intending to spend that money. They're just taking advantage of it. I mean, as I said before, dig the well before you need the water. This is the same strategy I've personally employed in my early real estate investing days. Each time I purchased a piece of real estate, always undervalued because that's one of my core principles for buying real estate, in a growth market, I would go back to the bank and go, hey guys, you know how I bought this with an 80% loan or a 90% loan? Yeah, well, I bought it way undervalued. Can you please revalue this property? Sure enough, they'd revalue the real estate, go, hey, you're right, Stephen, this is worth way more than you paid for it. What do you want to do? At that point, I say, great, please increase my loan back to 80 or 90%, release all that additional equity, and I'll keep it here just in case I need it in the future for renovating my real estate. Buying new real estate in case of a major emergency. Maybe I want to retire in a few years and go backpacking in South America. Or maybe Tesla stock's going to crash in the future and I'll be really glad I dug the well before I needed the water. This is exactly what Tesla themselves are doing right now. They're putting themselves in an even stronger financial situation, giving themselves even more future options, not coming from a place of need or necessity, but a place of strength and power. And just as a little bit of a bonus, since I know most people are too lazy to read forms submitted to the SEC by Tesla, I'm going to save you guys a little bit of digging and share a few insights that came out of this form, including whether or not Tesla is intending to pay a dividend in the future, what happens in the event of a potential hostile takeover of Tesla the company, and Tesla's general plans. So let's see what they had to say. Dividend policy. We have never declared or paid cash dividends on our common stock. We currently do not anticipate paying any cash dividends in the foreseeable future. Any future determination to declare cash dividends will be made at the discretion of our board of directors, subject to applicable laws and compliance with future credit agreements and other loan arrangements, which may restrict or limit our ability to pay dividends and will depend on our financial condition, results of operations, capital requirements, general business conditions, and other factors that our board of directors may deem relevant. Translation: Tesla has no intention of paying a dividend anytime soon, but in the future, when they're printing truly colossal amounts of cash, this may change. However, it's not on the radar at this point in time. I've actually discussed the topic of whether or not I believe Tesla will pay a dividend with my Patreon supporters in a few recent Q&As, but to sum things up, I believe that Tesla will at some point in the future face the decision as to whether or not they should pay a dividend, and I think that they will lean towards doing so, but if and only if, and this is major, this is very important, only if they cannot fathom any potential foreseeable possibility of them being able to spend that money on the business itself. I suspect at some point in the next 10 to 15 years, Tesla is going to be printing so many billions of dollars in free cash flow every quarter that they will face no choice other than to either issue a dividend or begin buying back stock, or a combination thereof. Now, I don't have a crystal ball, but thinking through this logically, at this point in time, it would be absolutely insane, in fact, moronic for Tesla to pay a dividend because they can still find ways to invest in the future of the business or build up their war chest just in case new opportunities present themselves, maybe some acquisitions down the track. Maybe they can solve the material constraints on battery cells and then scale production at staggering rates even sooner. But at some point in the future, there's just no way, unless Tesla is more creative than I give them credit, there's just no way they'll be able to spend all that money. At that point in time, it's like, well, what do you want to do? Stack another $100 billion this year? Or return some of that capital to our wonderful shareholders? Anti-takeover provisions contained in our governing documents, applicable laws, and our convertible notes could impair a takeover attempt. Our certificate of incorporation and bylaws afford certain rights and powers to our board of directors that could contribute to the delay or prevention of an acquisition that it deems undesirable. Just jumping in here, this is wonderful to know just for the few people out there that ever had any concerns. What about a hostile takeover? Well, hopefully nothing too much to worry about there. Not that there's many entities on Earth that would actually have the necessary capital to try and pull a hostile takeover off in the first place. And now for an overview of Tesla in their own words. We design, develop, manufacture, lease and sell high-performance fully electric vehicles, solar energy generation systems and energy storage products. We also offer maintenance, installation, operation, financial and other services related to our products. We are the world's first vertically integrated sustainable energy company offering end-to-end clean energy products including generation, storage and consumption. Now I just want to jump in here and point something out. Tesla is right. They are the world's first fully vertically integrated sustainable energy company. Now, those of you who haven't been living under a rock for the last few years will understand that sustainable energy is the future of energy. The fact that Tesla currently is the only vertically integrated sustainable energy company should give you a few clues as to why the stock at this point in time is currently on its way to Mars. And don't forget your Tesla stock to Mars t-shirts, linked in description. And by the way, yes guys, I do have to admit I actually am from the future. Designed these t-shirts and Tesla stock has literally gone vertical, up almost 60% since I released this design. And what the actual We also strive to lower the cost of ownership for our customers through continuous efforts to reduce manufacturing costs and by offering financial services tailored to our vehicles, our sustainable energy products, engineering expertise, intense focus to accelerate the world's transition to sustainable energy and achieve the benefits of autonomous driving, and business model differentiate us from other companies. In order to meet customers' range, functionality and performance expectations, we have employed our considerable design and vehicle engineering capabilities to overcome the design, styling and performance issues that have historically limited broad adoption of electric vehicles. Combined with technical advancements in our powertrain system, autopilot and full self-driving hardware, and neural net, our electric vehicles boast advantages such as leading range and recharging flexibility, superior acceleration, handling and safety characteristics, a unique suite of user convenience and infotainment features, the ability to have additional features enabled through over-the-air updates, and savings in charging, maintenance and other costs of ownership. Just jumping in here once again. In other words, if you're a legacy automotive manufacturer attempting to compete with Tesla, this is a thing that's going to make you wet your pants and then just cry in the corner, then consider how soon until you're retiring, then just give up on the entire idea of transitioning to electric vehicles because it's clear to anybody with more than 3 neurons that Tesla has won. In furtherance of our mission to accelerate the world's transition to sustainable energy, we have also developed an expertise in solar energy systems. We have leveraged our technological expertise in batteries, energy, management, power electronics and integrated systems from our vehicle powertrain system to develop and manufacture energy storage products including Powerwall, Powerpack and Megapack. These scalable systems may be used in homes, commercial facilities and on the utility grid and are capable of numerous applications including backup or off-grid power, peak demand reduction, demand response, reducing intermittency of renewable energy generation, facilitation of the use of renewable energy generation over fossil fuel generation, and other grid systems and wholesale electric market services. Drawing on our solar business expertise, we can also offer integrated systems combining energy generation and storage. Like our vehicles, our energy storage products can be remotely updated over the air with software or firmware improvements. We have the capability installed to produce and deliver 500,000 vehicles this year. While achieving this goal has become more difficult, delivering 500,000 vehicles in 2020 remains our target. Achieving this target depends primarily on quarter-over-quarter increases in Model Y and Shanghai production, as well as further improvements in logistics and delivery efficiency at higher volume levels. So I hope you guys have found this video insightful. In short, Tesla is in a truly dominant position, not only in the competitive landscape, and I use the term competitive landscape extraordinarily loosely because yes, there is a landscape, but no, there is not any competition. It is literally a one-vehicle race at the moment, excuse the pun. But Tesla is also in an incredibly dominant position in terms of the stock market and their ability to raise capital. Another $5 billion here for less than 1% dilution? Hell yes. As I said, dig the well before you need the water, and that is exactly what Tesla is doing. And just a quick note of caution for those people who've just suddenly heard about Tesla stock in the last few days or weeks and decided to buy for the very first time at all-time highs. I hope that you're an investor, aka somebody that plans on holding this stock for a 10 plus year period of time. Great, I'm still buying with every spare cent that I have. But if on the other hand, rather than being an investor, you're a moron, aka somebody who mistakenly believes himself to be an investor, but actually only intends on holding Tesla stock for a few years, good luck. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget, if you live in the US and you'd like to help out the channel and get up to 4 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 2 free stocks between $2.50 and $250 each just for opening an account. And if you deposit $100, you'll get a further 2 free stocks valued between $8 and $1,600 each. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake also using the link in the description. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. PS, if you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.